Welcome, friends. My name is Avinash and I welcome all of you to another interesting episode of Corporate Face-to-Face series. Friends, in this Corporate Face-to-Face series, we interview, emerging as well as established corporates from the corporate world, and we make an effort to introduce you to the top management of these companies so that investors can understand their company's business model better, their growth journey, and their future prospects. And today, friends, we have got a very interesting company by the name of Anupam Rasayan India Limited. And we have the pleasure of having the top management team, Mr. Vishal Thakkar, who is the Deputy CFO of the company. Vishalji, thank you very much for spending your valuable time with us today. I'm pretty confident that we'll have a very productive session and we know which can make our investors know your company better.
Avinash, thank you. Thank you for getting us. Always pleasure to have conversation with you.
Yeah.
Hope we are able to share some quality information with you.
Yeah, definitely. So Vishalji, my first question, which is little elementary, if you could tell us in a very simple way for our investors that, what is the kind of business model which Anupam Rasayan India, runs, and within, some sectors like agrochemicals, pharma, what is the kind of positioning of Anupam Rasayan India Limited as of now? So if you could add some color and begin.
Sure. So see, if you look at Anupam Rasayan, it's a CSM player. And so there are three specific words to it. One is custom, synthesis, and manufacturer. So what we do is we do customized products for our customers. So like our customers will be all innovator companies like Syngenta, Sumitomo. Those will be my customers who have innovator products, and hence they have the market size and the share and the and the pricing power there. And we do customized products. So we are a B2B company. We don't sell products in the market. We sell it to our customers who in turn manufacture the final product and sell it in the market. Now, so as I said, we do customized product development. Then synthesis, which is basically what we are saying is we manufacture products which have high multiple chemistries required into this product. So that's what we will do, and we provide manufacturing services to our customers. So basically what we are saying is you focus on R&D and product development and marketing and leave manufacturing and synthesis to us. So that's what it is.
Okay. So fine. I think very well articulated, Vishalji. Now tell me one thing. I was seeing from your annual report and presentation that the company has got a large presence in agrochemicals, personal care, pharma, specialty chemicals. Now, how do you all balance this product categories? Like, in a very simple way, are all the areas key focus areas for the company, or within this, which could be the focus areas where maximum growth over the next, say, 2 to 3 years could come in, based on the kind of technical capabilities, which the company has. So if you could add some color on that.
Sure. So see, we are more a chemistry company. We are more a provision. We provide multiple chemistry. So we come from the chemistry and technology background and process optimization background. Now, yes, if you look at the end product consumption or end product application, pharma would contribute around about 70% of our revenue. Personal care should contribute around about 15% of our revenue. 3 to 5% will come from agrochem, and balance will come from the other specialty chemicals. So yes, we are more towards agrochem, but if you look at it going forward, the growth, I think pharma should start coming into play more. We should look at some double-digit contribution in next few years, and personal care should continue. Polymer will be a very interesting one, which is where there are high-end niche molecules, niche products where we will come into play. And as we talk, we can talk about fluorination, where this whole story will unfold even more. But yeah, so that's how it will be. So agrochem, pharma, personal care, and polymers. I think that's the four that you can see us in that space.
So basically, what I understand, Vishalji, is these 4 sectors will be the growth engines for Anupam Rasayan over the next, say, 2 to 3 years. So this is an area where we have the skill set and the technical expertise which will help us grow, right?
Correct. So that is from the end application side, and from the chemistry side, yes, our current portfolio of chemistries and products and fluorination will be another one that will start driving the business for us.
Okay, now just a offbeat question as regards agrochemicals. Now, we have been hearing a lot of inventory destocking happening on the agrochemical side. In fact, most of the results also of the larger corporates, in the agrochemical space have been little disappointing. So if you could tell us, exactly what is happening on the agrochemical side, and is it that, since you all also cater to some large agrochemical players, what are the kind of signals the company is getting from your key customers? Is everything getting right, or maybe post September things will be more or less normal? Because the kind of trend we have seen from December quarter, then the March quarter, and now the June quarter, I think things have really become really bad, in terms of margins, in terms of performance. So on this, if you could share your thoughts, what is exactly happening?
So I think you're right that the agrochem cycle had its own thing. Especially, I think it was more to do with the inventory and the inventory levels in the supply chain was, which was the question both from the European side and also from the Chinese side. So yeah, you are right that to that extent there is an inventory destocking happening in the supply chain, and that is also leading to lesser production stroke sales into the company. So that is definitely one thing that is happening. I agree to that. However, if you look at it, this is all happening. If you look at it from a European perspective, that is there. But if you look at a CSM player, a CDMO player, or CSM player like us who are B2B, I think more what is happening rather than demand is getting pushed to the quarters later. So let's say the first quarter of ours also, if you see, we were flattish in our revenue, and probably in the next quarter also we are looking at that we might be in that kind of a zone. But as we go forward, we see that the demand, if you look at it from a movement from Europe to India. So what is happening if you look at it, the agrochem final product manufacturer are seeing a bit of a slowdown. But if you look at the people in Europe who were suppliers to these guys, which were my peers, they are facing a lot of more challenges because of the cost structure that they have got into. And to that extent, India is becoming a beneficiary to that. And if you look at in next 2 to 5 years horizon, I think India should be an outperformer in terms of demand growth compared to the world agrochem growth. So that is looking, and the fact to that data point where I can corroborate is the LOIs and contracts that we have signed in the recent past is a clear data to support that hypothesis.
Okay. No, I think I got your point, Vishalji, that there is going to be some short-term pain, but longer term, I think the structural story is very strong for you. I mean, especially for the agrochemical sector. Now, coming to your customer base, Vishalji, if you could give us some color as to what is the total active customer base, which are your key customers? If you could share segment wise, whatever you can share. I mean, we'd love to hear some names because that gives a better conviction, from the investor point of view.
Sure. So see, as you know that in a CSM player, typically our ability to put customer's name, we need to get their approval to say that I supply to
No, no,
them.
exactly.
So to that extent, if I am not able to say many of the names, please pardon me for that. Initially,
Whatever you
upfront
can
I'm
share,
asking for, but
whatever you
whatever
can
I
share.
can say. So I can tell you that today we have 29 multinational companies as our customer base. Okay, and these are all largely originators who have the original patent holder of the product that they sell. So let's say like Syngenta is one. I have permission from them, so I can speak that yeah, Syngenta is one of them. Sumitomo is another one. DuPont is other one. So Adama. So these are the kind of customers that we will have. Now there are others as well, but I would restrict myself from making those names because of the confidentiality. But these are the kind of players that we are talking about here.
Okay. And Vishalji, one more thing I wanted to ask you that, these 29 or 30 customers, what we have, I mean, on an average, what's the kind of success of Anupam Rasayan in adding new customers to its kitty? Like, this 29 is as of date, but over the last, say, 2 to 3 years, have we been successful in adding some few customers, or largely the business is repeat business?
So Avinash, first that 29 are only multinational that are spoken. In total, we
Okay.
would have serviced more than 70 customers.
Okay.
Now, one. Two, what happens is that this business of CDMO, CSM business has two parts to it. One, you always grow with your customer and enhance your wallet share in their portfolio. So that you will continue to do. So Syngenta, if let's say 5 years, 10 years back I was supplying, I'll continue to supply and I'm only increasing the revenue from them. However, what will happen is that you will also add more and more customers because that's how you increase your portfolio. And that's how you increase your footprint. And that's how you increase your quality of business because, the larger the portfolio of customers, better is your company's spread of demand, right?
Exactly.
So one example I can give you is that 7, 8 years back, top 10, 80% of our revenue used to come from 2 customers. Today that are 10.
Oh,
Today they are 10.
okay.
And that time it was four products. Today it is 24 products. So
Okay,
just to give you a context of how much we are getting diversified.
okay. No, I think very well said. Understood. Vishalji, now tell me one thing in terms of your company's product pricing strategy. Like obviously, you said you will be getting a higher wallet share from your existing customers, plus you will be adding new customers. Now, in terms of pricing, is the pricing very dynamic based on the raw material price increase, or is there any fixed price contracts in your business? Pricing, how is it decided? On an annual basis, is there a kind of a volume commitment from the customer, or basically it's demand driven? If you could, share these inputs with us.
Sure. So again, when we say that we are in a custom synthesis kind of a business or CDMO kind of a business, what happens is that you have a long-term contract. So you have a contract which are 3, 5, 7-year contracts, and there you will have a minimum offtake agreements. With you will have a rolling forecast of your projections for the every year, and that's how we do it. Now, when you do a 5-year contract, I don't think either of us are so knowledgeable enough or so much ability to forecast the price, the cost components of each of the production, that we can agree on that for a day one. So we will have a
Exactly.
formula, and our formula is typically, if you see, is completely passed through. So what we'll say is not only raw material, but also the overheads, also the energy cost, also the utility cost, also the carrying cost, also the cost of capital. Everything will be accounted for, and then we will do the prices. It's a pure formula.
Okay, understood. So basically, you get all your conversion costs also apart from the basic input cost also, and then the pricing is decided, right?
Correct. And there I would use the word only validation rather than a conversion. I would just and second, I would just say that yes. So and then every 6 months or 12 months, as the case maybe, we will review the pricing.
Okay, understood. Okay, now Vishalji, coming to the competitive landscape, I think every industry has got competition, but your business is a difficult business, requires a lot of skill and expertise to actually service such large MNC customers. Now, tell me one thing in terms of competitive landscape, how are we positioned? Like, who could be the comparable peer for Anupam Rasayan, if at all there are any, or maybe we compete with maybe some global players. Can you throw some color on this?
Sure. So see, what happens is once the product comes to us, we don't have competition because they are all under a long-term agreement. So there you don't have. But to get that project or get that product into your kitty from that customer, yes, you will be. My customer will be talking to multiple suppliers like us. So let's say in India, you may say that PI is one, Deccan is another one, Aarti in some cases come into play. Naveen maybe in couple of cases, but largely they are with Deccan, PI are my peers, if I were to say. In international market, you will be like somebody like your let's say ISIM is a one, or let's say there is a players like your Saltigo or Cap. They will be there. In China there will be Lian or others. So these are the kind of players who are our peers in the industry, who would be vying for similar kind of projects. Now what happens if you look at it, the total portfolio that is getting outsourced by these guys is large enough for us to be more sensible, and there is enough and more for each of us that we don't really try and compete with each other on a product to product basis.
Okay. Well, understood. I think so. There's enough room to grow for everybody. That is what you say.
Correct.
Achha, Vishalji, now on the specialty chemical product piece, a lot of news has been floated in the market that prices have corrected. China is also now coming back in the market. So on the specialty chemical piece, which Anupam also contributes. If you could tell us, what is the feel you're getting on ground? Like, have things normalized in terms of demand, in terms of prices, and within the specialty chemical basket, how is the company positioned? Like, if you could give us some broad idea on this.
So see, the large kind of a price volatility you will see, and especially that comes from China, will be more on the products which are more into the base chemical side, or a very early intermediate side, is where China has been holding stock, and they are trying to compete there, and they are trying to liquidate their inventory, and hence the part of it. However, if you look at it from a specialty side, like there'll be hardly a handful of one or two more players fully manufacturing the same product that I manufacture for my customer.
Okay.
So to that extent, for a CSM guy, it will be difficult that there will be a pricing pressure from a output side. Okay. Two, they are under a contract, so there will be a long-term volume agreement that we will have. So that will anyways be honored.
Exactly.
Third, the pricing is completely passed through for each of us, right? So I don't carry the risk of the input raw material. So let's say tomorrow the benzene price drops, fine. I will have my revenue lesser, but my margins will remain the same.
Okay, understood. Fine. So your margins are protected. So basically, even if the revenue comes down, I think you don't have a problem. Understood.
Exactly.
Okay, now Vishalji, coming to the competitive advantage which the company, now it's very simply, Anupam Rasayan has developed so many products, such a lot of customers. Now, what exactly you would define? How would you define your company, and how would you differentiate it with, let's say, other comparable peers? Like, what is so special about Anupam Rasayan India that we are doing better? Like, in terms of the qualitative nature, because quantitative everybody is aware, but since you are one of the senior team members, if you could tell us what is exactly the qualitative differentiation of our company vis-a-vis others in the market?
So see, I would not want to say how am I better or worse to my peers, but what are my strengths? Let me talk about that.
Exactly.
And coming to my strengths, one is technical capabilities. So we are good chemists and good process engineers. So the ability to do multiple chemistries and optimize the process, make it more efficient, more effective, more cost effective is the first part of it, which is the reason why these customers choose us. Then once they choose us, two or three things that we do well. One is we do what we say and we say what we do. So customer centricity is very important because see here my customer is dependent upon me that I should be able to deliver products on time in for the volume that we have agreed, for the timelines that we have agreed, for the price that we have agreed. So you becoming a more and more strategic partner rather than trying to be a third party supplier is a very, very essential part to this game. Third, if you look at it, most is the supply chain. Are you able to solve that supply chain solution for them? See, nobody like a Syngenta is going to source 100% from me unless he knows that I have the whole supply chain sorted out for me. I have a full backward integration plant. I have that ability to deliver. So I think that is there. And then over a period of time, the 10, 8, 10, 20, 15 years of experience of what we say, what has been delivered, and why we say always matters to my customer because they are dependent upon us. So I think I would put it in three ways: technical capabilities and process optimization, customer centricity, and supply chain solution. I think these are and the last one is assets. If you have everything but not asset on ground, then you have a problem to solve.
Okay, understood. I think very nicely articulated by you, Vishalji. Now, coming on your financials, I think FY23 numbers were pretty solid. I think I was seeing your profit after tax of 217 crores. In the first quarter also, I think the traction has been reasonably good. I think we've seen almost 4,000 crores of letter of intents, which the company has signed. Now, first of all, tell me, on the fundamental side, on the financial performance side, how do you see the second half for FY24 panning out in a very broad way? And the second question is, Vishalji, we have got 4,000 crores of orders. Now, the market is excited. Such a large order book has come in. So tell me one thing, what is the kind of timeline we would take to actually execute these orders? So, if you could cover both these points for us.
Absolutely. So see, as I was saying that the first two quarters of the year, so Q1 FY24 and Q2 FY24 are little bit muted compared to the forward half. So H2 FY24 should be a better performing half than the H1 FY24. I think that's what I would suggest. I would see, and that's what we are seeing right now. And that's what you also, when you started that, the agrochem industry is having the first couple of quarters to be little sluggish. So I think that's where we are. Coming to the LOIs and contracts, yes, totally. If you look at it till date, we would have signed around 7,600 odd crores of LOIs and contracts that we have signed, of which reasonable number of so the revenue has started coming in, probably around 200 odd crores of revenue would be coming in, And what happens? These LOIs take its time to start getting commercialized, and then it takes its own time to get fully ramped up
Okay,
because
understood.
it takes that way. However, if you see, so these LOIs we should be able to see revenues coming in by in 3 to 5 years, but not everything after 2 years or 3 years. It's everyone will take its own time. So some will start now, some will start later, but it will be a full ramp up, and by in next 3 to 5 years we should be able to fully ramp up the LOIs that we have signed till now.
Okay. No, understood. I think so. One thing is very clear that these are confirmed orders, Vishalji. Signed orders with you that they will execute it obviously over a period of time.
Exactly.
Okay. Now, Vishalji, just another financial related questions like margins. If you could give us some idea, maybe not a number to tell us, but overall, what is the kind of picture? Can we expect that with better volume of business, more orders coming in, and hopefully the agrochemical cycle also improving? If not for 24, but for 25, can we assume that there is some scope for margin improvement for our company going forward?
So, Avinash ji, I would say in a simple way, our margins are pretty much predictable for a very simple reason. We have passed through on these things. So
Exactly.
typically, if you see, we have been historically guiding at 26 to 28% margins on the EBITDA side. I think
Exactly.
historically, if you see, we have been able to deliver those numbers. We see that we should be able to continue that kind of a number. Uh,
Yeah.
when the market is more conducive, probably we can get a percentage point or a couple higher. Market is
Yeah.
not that conducive, then probably we'll be around 26 or kind of a thing. But we'll be hovering in the range of this 26 to 28, give or take a percentage point up or down on that.
But I think even these margins, let me tell you, Vishalji, are very good. I think a very tightly managed ship from your side. Okay, now coming to the strategy for Tanfac, I think Tanfac has been taken, or now you have, I think, company has got about 26%. So, any thoughts, Vishalji, here to take complete control of 51%? Because that is a good strategic asset. If you could also tell us how this is adding value to overall Anupam Rasayan's operations.
So see, one thing, let me talk about the shareholding, and then I'll talk about the strategic objective of that. So shareholding, if you look at it, we have got into the shoes of Aditya Birla Group. So basically, we have now a joint venture agreement with TIDCO. So today, if you look at it, between both of us put together, will be 52% of the shareholding.
Okay.
And under the JV agreement, we have the management control, and we are responsible for the management performance of the company and execution of the company. So in that sense, we are 51, and that's the reason if you look at it, we consolidate this Tanfac on a line by line basis as well. So from that perspective, we're not required, or we're not too uh, required to now add more shares to our shareholding. However,
Okay.
under the JV agreement, also there is a right that whenever they sell, we will have the right of first refusal. So we have our offer. So as and when
Okay.
TIDCO wants to sell, we will be happy to buy that.
Okay. Okay.
But
Fine.
otherwise, there is not and balance 48% is with the public. We ran an open offer. We could hardly get anything. So we're fine on that situation. Now let's come to the strategic nature. See, Tanfac is one among the only 4 players in the country which manufacture HF today.
Okay.
And the other 3 are the ones who use it largely for their consumption. They don't sell in the market.
Okay.
So, and HF and KF are the starting fluorinating agents from where the fluorination can start, right?
Okay.
So those are our initial building blocks or the fluorinating agents that we require as a raw material for our
Okay.
fluorination strategy. And
Okay.
that gives us the whole backward integration and the supply chain solution that we are able to now go to commercialize our fluorination molecules that we have developed over last 5-6 years. So probably those 30-31 molecules that we've developed and what we are also in pipeline will be able to commercialize.
Okay.
And
I think, yeah, tell me.
good.
Yes.
And those, if you see the latest LOIs that you were talking about, are
Yeah.
largely for the fluorination side.
Okay.
And one of the reasons, or one of the main reasons, is this.
Okay. Understood. I think very well articulated strategy, Vishalji. So I think one can safely assume that fluorination, is going to be the key trigger for Anupam Rasayan, going forward.
Yeah, it will be one of the strong growth vectors for us. Yeah, I agree with you.
Now, Vishalji, coming to the working capital side, I was looking at your working capital cycle. A large part of your working capital is blocked in inventories because it's come down in FY23. But any specific reasons why inventories are so high? Because, typically you all generate such a attractive EBITDA margin, operating profits are also pretty attractive. Now, on the working capital side, can we expect some improvement, hopefully, going forward?
So let me answer the last question first, and then I'll go to the balance one. Can we expect? Answer is yes, and you would see that by the year end that there'll be a reasonable improvement on the working capital side. Now, why do we need a particular level of working capital? If you look at it, when you are a single supplier or a primary supplier to your customer, and they are reliant on us, typically they mandate that we have particular level of inventory holding in our portfolio. Having said that, I don't think the number that you saw in 2022 is the representative number. And that's the reason you would have seen that in 24, 23 also we dropped it, and 24 also you will see the reduction there. Why did it go up? It was basically, if you remember, that was the time 22 start of the calendar year and end of the financial 22, which was a Q1 FY20, Q1 CY22, was the time when there was the Ukraine Russia coming up, and that, and along with China zero COVID and other stuff, led to us really having a lot of demand and insistence from our customers to hold more and more inventory.
Understood.
And that's what we did. And that's the reason it was high, which we are now unwinding.
Fine. So understood. So I think hopefully the operating cash flows will be better because, once your working capital, is tightened, that will throw a lot of operating cash flow also for you.
Okay. Yeah. So if you look at, and then you're right, that's what has happened. If you look at even FY23, my operating cash flows were 250. I'm only talking standalone. I'm not even talking console. Standalone, my operating cash flows are 255 crores on a PAT of 170 crores. Give or take a couple of crores, but that's where we were.
Okay, now Vishalji, coming to the overall headroom for growth, COVID is not there, normalcy has come in. Like internally, what kind of growth over the next, say, 2 to 3 years is the management gunning for? Like, we obviously know the first quarter number, but on a broader long-term basis, what is the kind of vision for this company in terms of top line? Can we at least get some number over the next, say, 2 to 3 years? This is what we aspire, and obviously aspirations are important, for delivery.
Okay, so I will put it in a very simple manner. If you look at our historical growth, I think we should be able to continue our historical growth rates over the next 3-5 years as well.
Okay.
So, and on a compounded average annual growth rate as well, we should be able to do that. So our CAGR basis, we should be in the historical numbers, if not better. But let's go with that for now.
I think very good. I think because, despite challenges, if you continue to grow on a sustained level, I think sustainability is more important and respected, in the market. So that is very good. Last question, Vishalji. Now, every business has got some risk attached. Like, in our business, what is the kind of risk which you perceive is probably the single most important risk for us? Of course, COVID was an abnormal event. And how do you do your risk mitigation strategy? How do you ensure that you come out successfully despite, year to year, whatever challenges come in or maybe some problems crop up?
Okay, so let me talk about the risk mitigation, and then I'll say what is the top of the mind risk for us. The risk mitigation is simply, if you look at the business model that you create a business model where you are not absorbing lot of risk. Rather, you only absorb risk which you can manage. Like in my business, the risk that I can manage is operational efficiencies, chemistry, yields. Those are the ones. So that's what we keep. But the commodity risk, we pass it on to the customer, because we say that even if you were to manufacture, you would have also been exposed to this, so you might as well be exposed to this. So that's what it is. So that's the kind of a thing. Even from a forex point of view, we will hedge our portfolio fully. We don't try and say what will be the dollar tomorrow or 2 years out. So don't take risk which we don't understand or which we are not geared to manage, or our ability to manage is low. So that's where we will come from. The largest risk to my mind in now near term or next 2 to 5 years is basically is a humongous opportunity that is there ahead of us, and our ability to capitalize that is where it is. So demand is there, LOIs are there. Now, can you convert that into revenue and profit? where the key part will be probably assets on ground, execution capabilities. So that are the ones that we should be focusing on. So it's more execution as a big focus area for management, to my mind, I would go with.
Well, I think very nicely mentioned, Vishalji. So thank you very much, Vishalji, for the valuable time you spent with us and spoke about the company. My best wishes to you, to your entire management team. Thank you.
Thank you, Avinash ji. It was great talking to you, and had a wonderful time having conversation with you. Thanks a lot.